Quite a kangaroo market today. We were opening up, coming down, we're negative, came back up, and if we were down today, there would be a lot of reasons for it. Talk about schools in New York City closing, Harvard closing, rising case numbers, all of these reasons to say the market should be down. But the market was up. We don't really have any good reason for it. There's a couple that I kind of have that are impossible to prove, of course, that there's a lot of money on the sidelines, that money needs a home, all of these kinds of things. General market principles that seem to be at play. And that's probably what's going on. That said, we have to make some sort of outlook for where the market's going. And we've talked about this kangaroo market, this trading range that's kind of being established. And it looks like it's starting to take form if this kangaroo market is true. Could not be true. Between S&P about 3,200 and S&P 3,000. Now, if the rally keeps continuing, if we reach a new post-COVID crash high, no kangaroo market, just a medium-term blip. It is what it is. I think this range could hold. I think we could see some pullback. I don't know if we're going to see pullback below 3,000. It looks like that's going to kind of be hard to see. But we just got to kind of see how things develop. I can't really market time. I'm beating the market somehow with 58% cash. I'm beating the market. So these last 2 days, even today, when, I obviously had Jumia, had a short that was getting squeezed, still beat the market with 58% cash. I'm positioned well. I just have really good growth companies and some safer coronavirus-resistant companies. I'm not really doing this whole coronavirus trade. I know some people who have had good success with that, and it's indisputable. No, you're going to have good success with that, it seems. But a lot of the areas of the market seem very pricey to me, particularly the areas that continue to drive us higher, like Apple, Amazon, Microsoft. And those guys warrant the rally, right? Because I just saw a statistic that they account for 21% of the gains and of the market cap of the overall market, but also 21% of the cash flows. So that's good. That's the way it should be, I would say. But I don't really see the cash flows improving a lot beyond this level. Apple, they've got their customer base. They might be able to sell some more iPhones. Who knows? It's a big question. I feel like they've seen a lot of that cash flow gain. Amazon has certainly seen cash flow improve, as is their market cap, having recently crossed 3,000. But it seems like COVID was kind of their accelerant. They got the older population in, and now the people who are going to use Amazon, to me, it kind of feels like might use Amazon. I need to see more about these other businesses, and I would need to see Walmart Plus not take any customers away in order to be confident in some growth there. Microsoft, they've got a good cloud platform. They do have a very high multiple, so we'll see what happens there. So the drivers of this market, mega cap tech, have kind of reached what I think of as like the maximum they can be for the rest of the year. Obviously these are companies that can continue to grow, especially with inflation. It's all about earnings and cash flow at the end of the day. So if there is inflation, Apple's going to increase the price of the iPhones, increase the price of the Macs. That's going to increase earnings, which is going to increase the stock price, all because of inflation. And that might be some sort of trend that is beginning to take place, because typically we've seen gold and the market trade inversely. We didn't see that in the pandemic. People kind of just wanted to have the US dollar. But now gold is hitting all-time highs. They haven't been at this level in over a decade, and that level was about all-time highs in the middle of the financial crisis. And, the market's up, and typically the inverse happens. It's the financial crisis, and then gold goes up. So we're just going to have to see how things develop. No catalyst for today's rally, no catalyst for yesterday's downturn. Cases are probably going to hit a record tomorrow. Let's see how the market digests that. Mega cap tech feels like it's at a top. The banks haven't recovered since that post-COVID high that we still have not reached. Airlines haven't recovered. Cruise lines haven't recovered. I feel like in order for the market to continue rallying, those areas of the market, the laggards, need to recover. And with cases rising, I don't really see those areas of the market recovering. So the kangaroo market that I've been talking about may be at the top of the kangaroo market, top of this range. So we may or we may not get a pullback. We'll see what happens. Can't really tell you one way or the other. I've kind of been trying to tell you that a pullback's coming. Hasn't really seemed like it's coming. So I don't want to market time, you know. I kind of learned a lesson here that I don't want to market time. And I just kind of want to get my positions and go back to holding and sitting in these companies and go back to being a partner in these companies. So hopefully this pullback comes. You know, I portfolio manage, so I'm going to predict what the market is going to do, and I'm going to predict that we are, in fact, at the top of this range and that we should see some pullback. And I'm going to start using all this cash and really bringing this. It was at 58% yesterday. Let's get the updated because I did do some buying today. It's at 56 now, 56% cash, so obviously nothing crazy, no crazy moves today. Did actually do slight selling. And we'll see what happens. Hopefully we'll get back in, but we're still beating the market at 56% cash. So until next time, peace.